Hi, I'm just going to do a little write-up on a starter guide really for exponential moving averages and a simple 55 and 200 moving average crossover strategy. I did a little bit of research, copied and pasted a bunch of stuff onto the screen here that you might want to read. I did a little bit of editing of it, and just post it. Just pause the video maybe and read up about this. I'm just going to go straight into the 55 and the 200 um, strategy after a quick explanation of what they are. So here we have our structure. And this is Aurora, and it's a 4-hour chart. I'm just going to simply explain quickly what a 55 and a 200 EMA are. So an exponential moving average in this case is based on this 4-hour chart. So each one of these candles is a 4-hour candle, and each bar is a 4-hour bar. And so a 55 EMA is an average of the last 55 bars. And a 200 EMA is an average of the last 200 bars. And there's an exponential portion to it that gives extra weight to recent price action. So it basically hugs the price action a little bit tighter than a simple moving average. Anyways, um, for this demonstration, the 55 is in yellow, the 200 is in blue, and it's a simple strategy, really. Like, um, essentially, when price is in an upswing, the 200 EMA acts as support for price, as well as, to a large degree, the 55 EMA. And so a good place to consider buying a long position or getting into a long position is where the 55 crosses over top of the 200 EMA. And I'm just going to place an arrow basically where that is. It's right here, and it's right here. And I'm just gonna say, okay, you buy the retest of the 55 or you buy the retest. That's what you want to do, where price breaks above the both 55 and the 200 EMA and then comes down and retests it. That's essentially the best place where you can buy, you know, and then you go long there. So let's just say we went long right here. And obviously, as you can see, price has broken upwards really bullishly. And you'd be holding, and you'd be holding, and if you were using other indicators like RSI or whatever, you may have sold up at the top here, but for this demonstration, we're just using exponential moving averages for buys and sells. So where the 55 crosses back over, or underneath, I should say, the 200 is essentially not a bad spot to consider making a sell, because that's the confirmation that price is now in a downtrend. And we're going to do a little price measurement here. We're going to use a price measurement tool just to see what kind of growth we're talking about here in a potentially best case scenario, right? But where you bought just before a breakout. So we're looking at a 283% gain, you know, and it probably would have been a whole lot more if you had, caught the top, right? You would have been looking at 500 or so percent. But anyways, we're just talking about crossover strategies here. So you get a nice 240% gain, 284% gain. Um, Now, the next place where you'd consider maybe purchasing would be right here, where once again the 55 is crossing above the 200 and supporting price. Unfortunately, it wouldn't have been very lucrative. The price broke down shortly after and went for a good fall. I think you might have made a couple of percent if if you had seen that the cross was actually about to happen and bought before the cross on this retest of the 55, or just after the cross and bought this retest of the 55, you come in and bought somewhere in here, you wouldn't have made much money if you were selling it right here. However, you're only losing or losing a couple of percent. It's not much more than what you'd be losing if you were stopping out on a regular trade. Anyway, the next time 55 crosses above the 200 is right here. It's just in recent price history, and usually when the exponential moving averages fan out quite extreme like this or like this, you're going to go for a good price. You're going to go for a good hike. So, if you were to buy in here at this cross, you know, there would not have been a retest to really buy in. You'd have to take a look and see, and know like that there is a golden cross about to happen, and I should maybe get in here below the golden cross. So just measure this here. I'm gonna get this thing out of the way for the moment. So if you were to get in here somewhere on this, even right at the cross, you'd be looking at a almost 70% hike so far. Now, what price is going to do in the future, you know, I'm not going to speculate on this video right now, but um, this is just a simple explanation of how you can use 55 and 200 EMAs to really like make some good money. And it's like printing money. It's like a printing press. Anyways, thanks.